Hi everyone, welcome back to Corporate Decoder, the place where we unpack those confusing corporate filings, and I've got a spicy one for you today. Get ready, because Match Group is making some big moves and we're going to decode exactly what it means for their future operations. Before we dive in, if you appreciate getting straight, no-nonsense insights from these reports, make sure you're subscribed. We also have a fantastic community over on Discord where we break down these stories even further, so check that link in the description below. Alright, let's jump right into it. This filing today is from Match Group, primarily an announcement about something called senior notes. Now that might sound a bit dry, but trust me, it's a huge deal for any company, and especially for a dating app giant like Match Group. So what's the big news? Well, on August 6th of 2025, Match Group announced that one of its key subsidiaries, its indirect wholly owned subsidiary, named Match Group Holdings 2 for short, is planning to offer a massive $700 million worth of senior notes. These notes are like loans the company takes out, but framed in a way that they can be traded on markets. These specific notes are due in 2033, meaning they're long-term debt. They're being offered in a private sale. This means they're not selling these notes to just anyone. They're targeting big buyers, people who are considered qualified institutional buyers, and some investors outside the United States. This is a common way for large companies to raise a lot of money without the immediate scrutiny of a public offering for the notes themselves. Now, here's where it gets really interesting. Why are they raising all this money? Well, the plan is to use the money to pay off existing debt. Specifically, they're going to use it to repay all of the outstanding exchangeable senior notes that are due in 2026. Think of it like this. They're taking out a new, bigger loan to pay off an older, smaller loan, but with a much longer repayment timeline, and likely a different interest rate. This is a classic refinancing move. After paying off that old debt, any leftover money from this $700 million offering will be used for general corporate purposes. This is a pretty standard phrase that can mean anything from investing in new features for their apps to marketing campaigns or even acquisitions. It gives the company flexibility. Now, you might be wondering, what does this mean for the company and for us as observers or investors? Taking on $700 million in debt is a significant financial maneuver. It signals that Match Group is confident enough in its future cash flow to take on this new obligation. By refinancing their 2026 notes, they're likely aiming to lower their immediate interest payments or extend their debt maturity to better match their long-term business plans. This can free up cash that management can then reinvest into growing the business. Remember, Match Group is the parent company for a bunch of popular dating apps like Tinder, Hinge, and Plenty of Fish, among others. They operate in a hyper-competitive digital dating space. Staying ahead means constant innovation and marketing. Raising this capital suggests they're planning for continued investment and growth. It's a move that shows they're leaning into the future rather than just managing current operations. Scroll Exhibit 104. This particular filing itself doesn't contain detailed financial statements in the way a full quarterly or annual report would, but it's a crucial announcement about their financing strategy. These types of 8K reports often signal major business decisions, and this senior notes offering is definitely a big one. Looking at the broader picture, Match Group has been navigating a complex market. User engagement and retention are key metrics for them. Any significant debt issuance like this makes us want to see how it aligns with their growth strategies. Are they investing in product development? Are they expanding into new markets? Or are they simply managing their balance sheet? This refinancing is a strong indicator that they believe the long-term prospects are good enough to justify this new debt. This filing ultimately paints a picture of a company that is actively managing its financial structure to support its strategic objectives. They're leveraging the debt markets to fortify their financial position. It's a clear sign of forward-looking financial management. Now, in terms of my analysis, here's the takeaway. Match Group is making a strategic move to refinance its debt. This $700 million offering signals confidence in future earnings and a desire to optimize their capital structure. The key to watch going forward will be how they deploy the remaining funds not used for debt repayment. If those funds are strategically invested in product innovation, marketing, or expansion, it could lead to significant growth. However, like any large debt issuance, it also increases the company's financial leverage, meaning they have more debt to manage through varying economic conditions. It's a calculated risk that leans towards growth. Alright, that's our breakdown of Match Group's latest announcement. What's your take on this debt offering and what it signals for the future of dating apps? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more decoded corporate news. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching, and I'll see you in the next one.